Empowering Digital Independence, Mastering Self-Custody panel. Of course, self-custody is a very important topic for all of us. We are being emceed by Winstead attorney Gavin Fury. We have Will Paul, Seth Hertline, Aaron Day, and chairman of the Texas Calendars Committee, Cody Harris, Representative Cody Harris, joining us on stage. Gentlemen, thank you for being here. Guys, welcome them to the stage.
Good afternoon, everyone. Welcome to arguably one of the most, in panels with one of the most important topics at the conference, in my opinion. Today, my name is Gavin Fury. I'm with Winstead here in Fort Worth and have been working in the space since 2017. I am very glad to introduce Representative Cody Harris, Texas State Representative Cody Harris. Cody introduced into the most recent Texas legislative session a resolution that would acknowledge under the Texas Constitution the right to mine Bitcoin, the right to protect against unreasonable search and seizures against digital possessions, and among other things, and the right to hold and own Bitcoin directly. On Representative Harris's left, we have Seth Hertline, who is global head of policy for Ledger, and Will Paul, we have public policy lead for Bitcoin hardware for Block, so BitKey, and Aaron Day at the end, who is actually running as a presidential candidate to raise awareness about CBDCs. So let's jump right in and ask, first of all, Representative Harris, do you have a genesis moment when you first recognized the importance to the right to self-custody of Bitcoin?
Yeah, so my journey along really understanding what Bitcoin is started actually just about 3 years ago. I haven't been aware of it very long. And it was actually my brother-in-law who was like, hey, man, you need to really pay attention to this. This is growing. I was like, man, you're crazy. This is monopoly money. This is not going to work. Then I started really doing a lot of studying behind it. From a policy perspective, to begin with, as a state legislator, as I began to learn and understand how quickly it was growing nationwide, I wanted to make sure that I, as a policymaker, I knew what I was looking at. And it was at that time that I realized that Texas is at a key position nationally and worldwide, because Texas is all about being fiercely independent and liberty, individual liberty. And Bitcoin works hand in hand with that. It's just such a natural fit. And so it's really kind of a no-brainer. It makes sense as a Texan and as an American. And I don't mean that for those of you who don't get to call yourselves that. It makes sense for everybody across the world. I believe it will lift all boats. And I think it needs to be a priority of the Texas legislature to make Texas the number one place in the world to do Bitcoin.
Fantastic. Seth?
Yeah, for me, it's there wasn't so much like a light bulb moment. I think it was really more gradual, and I think, as with most people, sort of an evolution or a journey down the rabbit hole. But one moment in particular, I think, was pivotal for me, and that was when I was very early in my personal crypto journey. A good friend of mine gave me a piece of advice, and what he told me is before I had bought my first crypto, he said, go out and get a ledger. And I did. So I went out, I bought my first ledger in NOx before I bought my first Satoshi. And I didn't really understand, why or what that meant at the time. It saved me a lot of heartache later, but I think it started my journey in the right direction. And it helped me to start asking questions about, why should I go get this thing? Like, what does that mean? And why, and how is this different from what came before? So I really credit that with sort of starting me in the right direction.
Thank you. Go ahead, Will.
Yeah, I'm pretty new on my Bitcoin journey, but I think the reason why self-custody in particular appeals to me is that in my previous life, I was a UK government official, as some as you can tell by the accent. And one of my jobs is always to think about how we, getting government out the way, how we giving people the space to make their own lives, to kind of build their own lives. And, I was looking for roles in the US, and Bitcoin and Block in particular came across, and particularly the focus on financial inclusion and economic empowerment to me was really important. And that's why I work for Block, and that's why I work on Bitcoin and BitKey, which is our new 2 out of 3 multi-sig wallet, which we're very excited about. So definitely it's part of that inclusion and that empowerment that I'm pro self-custody.
Thanks, Will. Next, ask whether the panelists see a parallel in history to the current push to track transactions and to restrict holdings directly in self-custody wallets among sort of law and regulation at the moment. So, Representative Harris, do you see a parallel in history?
I do. I think when we moved away from gold being the standard to U.S. currency, going towards more of a centralized financial system, that began where we're at today. And a CBDC it's all about the federal government increasing the amount of control that they have over our daily lives. And I don't care which side of the aisle you fall, if you're a Democrat, Republican, Independent, whatever it is, that's not good for anybody. History has proven that the more power that is centrally located with the government, the less free the people are. And so that's why I think it's critical that we do everything we can to stop the push for a CBDC.
Fantastic. Seth, go ahead.
Yeah, there is one moment that really jumps out to me. And Chairman, funny you should mention gold. My example relates to that as well. And that is in 1933, FDR issued Executive Order 6102, which by presidential decree outlawed private gold ownership in the United States. And part of that executive order required American citizens to surrender their gold to the federal government, and any who failed to do so could be fined or imprisoned for up to 10 years. This really happened in America. And not only that, the executive order then proceeded to devalue the dollar from 20 per ounce to 35 per ounce, which of course was the reason for the confiscation in the first place. And what I would say to you today is don't make the mistake of thinking that this can't happen again with respect to your Bitcoin.
I appreciate that. I know, Will, you sort of take a look where you're keen to make a case to lawmakers for how to do it properly. I don't know if you want to have any thoughts on that.
Yeah, absolutely. I think self-custody is broadly misunderstood by lawmakers. It's a scary thing. They haven't seen a wallet. They don't understand what it does. And I mean, the IRS tax reporting regulations out just last month, Block and Ledger and a number of companies, we really try to show lawmakers why self-custody is empowerment, why it's about people owning their assets, why it's actually consumer protection, and it's about financial inclusion. And I think it's key for us twofold as a community. Firstly, to tell our congressmen and tell our Congress people and our state leaders why we value self-custody and why it's important. And I think secondly, it's to continue to roll out as an industry that innovation to kind of solve those issues, to make it easy for the next 100 million people to get hold of and do self-custody. And I'm keen that we continue working with these regulators and lawmakers and just show them what they're missing.
Thank you. Want to sort of go into policy and some of the more recent policies that are being debated and have been some narrow misses, and ask the question, I'll start with you, Seth, whether you have a scariest moment in the last 2 years where a law passed or nearly passed that would have narrowed the right to self-custody.
Yeah, just one. There have been lots of scary moments in the last couple of years. I'll point out a couple in particular, a few from Europe and then one from the U.S. So the first one that I think a lot of people here didn't really understand how close this actually came. It was in the EU's MiCA regulation, or markets and crypto asset regulation. There was a vote in the European Parliament that came 4 votes short of outright banning Bitcoin and all other proof of work based assets in the entire European Union. 4 votes. It was that close. Now, at the time, the reasoning for that was, of course, because Bitcoin is boiling the planet, and Bitcoin consumes more energy than small countries, which of course we now know to be false. But that was the reasoning for that proposed ban. A couple other in the EU as well, the transfer funds regulation and the anti-money laundering regulation, which the latter of which is sort of still in its legislative process, have both seen amendments get tabled that would outright ban self-hosted wallets across the entire European bloc. Right. So I think we've managed on those 2 points to keep those bans out of the final product. But the people who want those things still want them, and they're not going to give up. And so this is going to be a perennial issue that we continually have to fight against in the EU. In the US, just quickly, this in fact is not a near miss. This is a hit. But the Infrastructure Investment and Jobs Act of a couple of years ago, of course, created this broker definition problem that we've now recently seen manifest in the Treasury and IRS broker regulation that is really existential for vast swaths of the crypto ecosystem here in the U.S. And so that's worse than a near miss. Like, that's a direct hit in my view.
And I think on that note, Will, you currently were submitted a comment letter on that with another group, correct?
Yes, exactly. I think Seth is entirely right. The broker regulations were definitely a hit. It would require wallets to do things they cannot do with information they do not have. It presumed wallets were party to every transaction that is taxable, and that is a fact that was incorrectly wrong. And so what we did in our letter, and we worked really closely on, was we spent actually the first 5 to 6 pages just explaining the concept of a wallet, the technical realities of what a wallet actually does. And it struck me as scary because I think very similar to the 2020 unhosted wallet rule, which would have again hit wallets so hard by requiring information collection that they do not want to do and do not have the ability to do. And that was the example of another regulation that came out, and it was not based on facts. I think the unhosted wallet rule especially had a 15-day comment period, which is beyond. No one can pull together any force in 15 days on such a complex area.
It was 7 business days, and it was released on Christmas Eve.
There you go. It gets even worse. So they wanted you to work on Christmas Day trying to do that. And what it told me was that there's a saying that I always have, which is when you have a chainsaw, everything looks like a tree trunk. And I think it's key for us as an industry to go out and be talking to these regulators and saying why they're wrong. And that's why we put forward this letter. It's why we were so engaged at the time, and to show everyone, what we do and why we do it. And most importantly, to give everyday Americans the financial inclusion, the safety and security that they want and deserve to control and manage their digital assets. We provide a solution. We do not do the transaction. So I think it's really important for us to do that. And the 2020 unhosted wallet rule was a very near miss that, could come back up. It's not dead. And it's important that we're aware of that as an industry. And as people who want to self-custody their own assets.
Representative Harris, does the scariest moment in regulation come to mind on this topic?
The good thing about Texas is we meet only once every other year, every odd-numbered year for 140 days. Unfortunately, now we're in our 340th day of this past session. But So that's the good news. So we're a part-time legislature. We're not like Congress where we can be there to screw everything up every day of the week. Yeah, y'all got that? So unfortunately, the problem with Bitcoin and cryptocurrency, even blockchain at its most basic forms, it takes a lot of work to educate legislators on what that is. Just like Will was talking about having to write a paper to explain what a wallet is. Unfortunately, it's necessary. Legislators are being pulled in a million different directions with people trying to educate us on the issues that they care about nonstop. And if y'all aren't there to be the loudest to make sure that the legislators understand how important it is, we're going to get bad information. So bills were filed this session, particularly in the Texas Senate, that would have been kind of a death knell for Bitcoin mining in the state of Texas. But luckily, we were able to avoid that. I was able to make sure it didn't make its way through the Texas House.
Yeah, and I know your efforts and Texas Blockchain Council and many others were highly effective. Now, and you bring up the Bank Secrecy Act, and maybe we could spend a couple of minutes on that. And Seth, I might look to you because it's really important to understand in sort of AML and KYC sort of powers that arise under the Bank Secrecy Act since 1970, and essentially what information is being collected and how much of it's being looked at, and the implications for the Constitution and the data being gathered in advance of any potential wrongdoing by citizens.
This was I guess sort of a nerd out moment for me, but I can't tell you how exciting it was to hear a major presidential candidate this morning, Vivek, specifically call out the unconstitutionality of the Bank Secrecy Act. It's perennially one of the sort of the third rails, like, right? Nobody can be against, preventing the financing of terrorism or money laundering or financial crime, right? And because of that gave the administrative state cover to continually expand the scope of the Bank Secrecy Act over the last 50 years. The BSA is a financial surveillance and bulk data collection scheme that has continuously grown and metastasized since its enactment in 1970, due in no small part to the effects of inflation. One of the key reporting thresholds for financial institutions in the BSA is transactions over $10,000, which if you index that back to 1970 when it was passed would be over $80,000 today. But of course, it's never been increased, which means that the reporting thresholds under the BSA continually cover more and more everyday financial transactions of customers, which get reported to a vast database that's managed by FinCEN in the Treasury Department. But importantly, those reports are not just accessible to FinCEN. They're available to be queried by all manner of federal, state, and local law enforcement without a warrant, which again gets back to the unconstitutionality of it in the first place under the Fourth Amendment. And, I think some of the precedents like Vivek spoke about this morning, U.S. Or West Virginia versus EPA, I think are increasingly making it apparent that the Bank Secrecy Act is not and never was constitutional. And I'm increasingly excited at the prospect that error that has harmed Americans for 53 years might finally be ripe to be struck down.
Maybe as a balance, I think that part of what you're saying with respect to the Bank Secrecy Act and AML and KYC compliance is to be intelligent about what types of providers need to do reporting. Is if a payment is made for a cup of coffee, is that really the type of transaction that needs to be reported and tracked well in advance, or was it intended for more like a broker transacting in securities on behalf of someone? Well, I don't know if you have any.
Yeah, I mean, absolutely. I think the stat that gets me is the IRS came out and they said 2 weeks ago that under the law as it's currently written and as the regulations proposed, they would have 8 billion, that is 8 billion returns next year. That is more returns than the rest of a 1099 system put together. That is a sensational amount of information that is not needed, that covers every transaction you could possibly think of in a way that...
Much of it duplicative.
Exactly. Completely duplicative. It does not actually go across the right people who are doing the transactions in question. So again, it comes back to me for that sensationalism. And look, I think Rep Harris is entirely right. What we need to be doing as a community and as companies is going to our lawmakers and saying, we want to show you what we're doing. We want to show you the benefits. I think self-custody actually achieves many of the policy goals that regulators want to go for. It provides self-empowerment, it provides financial inclusion, and it helps customer protection. If you do not custody on an exchange and that exchange goes away and you've held your own coins, you still have your coins. It could have saved us everyone a lot of time and a hassle. So I think it's got to be education. And I'm so excited for this industry, which is so innovative. There are so many interesting products coming out. Of course, I think BitKey is a fantastic one, but there's so many other products in the rest of the scene too. And it's for us to kind of have that space to grow and develop. And importantly, make sure that when in the future coming soon, that in the digital age, that everyday Americans have the right and the ability to self-custody, to self-manage and secure their own digital assets, whether that is financial or, importantly, non-financial. And that's for me also key. Wallets don't just do financial items. They do stuff like digital identities that are going to be so crucial in the next 20, 30, 40 years. So I definitely agree. And I think it's for folks like Cody Harris, and he's doing such a great job in Texas to kind of be on the forefront of protecting that self-custody for everyday Americans.
I appreciate that. And maybe we'll wrap up. We're a little short on time, but just to wrap up, if you have a best case or a worst case scenario in your mind for custody, self-custody law and policy in the next 2 years, and maybe just mention if there's a canary in the coal mine that you see, and we'll probably have to keep this to 15 seconds each.
This time we have lots of representatives all over the country using and proud of having a self-custody wallet and ensuring their constituents can also do the same.
Thank you, Seth.
Best case, Bank Secrecy Act is struck down as unconstitutional, and Keep Your Coins Act and the Blockchain Regulatory Certainty Act are enacted. Worst case is the IRS Treasury Broker Rule is adopted in essentially the form in which it was proposed, and something like DAMLA, or the Digital Asset Anti-Money Laundering Act, is enacted.
Representative Harris.
Best case, the states engage and decide to lead on this and push back against the federal government in the direction they're headed. We can't rely on the federal government alone to decide which way they're going to go. We've got to have the states there as a backstop to push back on them. Worst case scenario, they don't do that and the feds end up creating CBDCs.
Well, thank you all. There's the panel on self-custody. Thank you, all of you.
Hey guys, thanks for coming out to the 2023 North American Blockchain Summit. It was the best summit yet. We look forward to hosting you again next year. If you enjoyed the summit or like what you saw in this video, be sure to subscribe. If you're interested in learning more about membership in the TBC, go to texasblockchaincouncil.org to learn more.